You've been warning us for a while that there are all these issues building up about who's going to be responsible for business interruption and how the state legislatures, not to mention Congress, are going to play this out. What's happening right now? What's the state of things?
I think the state of affairs are somewhat exactly as Warren Buffett just said. There is going to be sort of a looming battle over whether there is business interruption coverage and whether there is what's called civil authority coverage, which some experts are talking about this being sort of a version of that. But the first hurdle that always has to be overcome here, and that's why there's going to be litigation, there's been some requests for class actions, is it's going to be around whether there's physical property damage. And then once you get over that hump, if you can, there's going to be a lot of exclusions, which is something that he alluded to there. And there's going to be exclusions around pandemic, epidemic, and viral. And many, many companies will have explicitly avoided this exposure through their contractual provisions. But as he said, some may not. Some may not have exclusions, and some may have wordings that make it more likely to be property damage than not.
And going forward, Eric, I guess my big question is, will insurance companies write for this type of things? We asked Buffett that during the meeting, or I asked him that during the meeting. And he said, look, if the price is right, they will. But he said they would have written that insurance a few months ago, and it would have been woefully underpriced.
So I think he also maybe alluded to the possibility that Congress has, within it right now, a draft bill which would be sort of the equivalent of Terrorism Risk Insurance Act. It's called PRIA, Pandemic Risk Insurance Act. And it would put into place backstops and ceilings and deductibles that would encourage the industry to write. Right now, it's pretty certain to me that the industry is going to retract from this. The pricing is going to be very, very hard to understand, very hard for them to get their arms around. Whether you have PRIA in place, if you have PRIA in place, then you get to the question of whether the pricing is good enough for the companies. And I think he talked about that when you were asking him questions and interviewing him. And that's where you could at least get some price certainty if you know where that long, long tail is cut on exposure. Then experts can price under the curve, so to speak, and tell you what risk they're willing to take.
This isn't an easy fix or a solution that's going to come anytime soon, I would say. How do you think this plays out over the next 6 months when we don't even know if the pandemic's going to go away in the summertime, if it comes back in the fall? There's so many questions around that still.
Well, the first thing is on the litigation front. There'll be complaints filed. There's already been complaints filed. Courts will begin to judge whether this is property damage or not. It'll be state by state, so there'll be some differences there, although most people think you need bread and butter physical alteration of the premises to have either business interruption or civil authority exposure. Then obviously there's legislatures that are still threatening to undo those exclusions. I've always thought that was unfair and insensible because the industry specifically avoided this. And you could bankrupt the industry given that they never collected premiums, many, many, many of the companies, for this kind of exposure. And Congress will, wind its way. It could be several months. It could be fast if they want to basically show that the industry should come back and get some strength. But I agree with you that if you look at the history of the Spanish flu and what's being warned here, the fall could be bad. The Spanish flu had 3 waves, obviously. And I think it's going to be tough for insurers to kind of price this until we get through this pandemic, and then probably with some kind of PRIA-like statute in place. Some are against it, some are for it. It's probably going to be voluntary, I imagine, not mandatory like TRIA is. And then maybe you'll start to see pricing coming back. But, you also heard him that, he's very long on the industry. The industry is well reserved. It's solvent. It's in generally, I think, a very, very good place, both on life and property. But again, the thing we have to watch out for is the interest rate environment. Both sides of the house, property and life, really, it's hard to do well enough when the interest rate stays super low for a super long time, because they've got to put the premiums they collect from you have to go in relatively very, very safe, very interest rate sensitive assets.